So in this video, I want to walk you through how to sell a naked put on Interactive Brokers. Now, we've got Nike on the screen here. You can see that I own 10 shares at a cost basis or an average price of 65.24. The current price is sitting at 57.29. So I am down on this position by $79. Now, the key thing here is I'm a big believer in Nike. Nike has been absolutely damaged. As you can see here on my screen, we kind of had Nike sitting at around $81 back in February 2024. And you can see it's gone all the way down to a low of 55.76. So it's made a little bit of a recovery and it may recover from there. I've got a number of puts on Nike at various prices between $60 and $70. But what I want to do is I want to sell another put at below the current price around 7 to 8 days out, just to A, show you guys, and B, for me to pick up more shares. If Nike does continue to go down, I can get it at a cheaper price. So once you're in the stock that you want to trade or look to purchase 100 shares of via selling puts, you click on the options tab. And what that does, it brings up the options chain. So puts are on the right, calls are on the left. Now, the first thing you need to do is select the date to expiration. So I'm going to go all the way out to next Friday, which is 7 days away, May 2nd, which I've already got selected on the screen. And like I said, I want to get assigned Nike shares. So I don't want to go too far out the money, but I don't want to go too close to the money. So I want to make sure that there is still some potential downside and I want to get paid for that downside. And if Nike goes up to $60 next week or stays at 57, 58, it doesn't really matter. I'm still going to make and keep that premium of whatever strike I decide to sell. So because I want to get assigned the stock, I'd normally look at the delta, but in this case, I'm just going to go with gut feel or intuition here. And looking at the current strike prices, which are in the middle of the screen, I kind of like the look of $56 as a potential strike price. So you can see here at the bottom, the mid price is sitting at 82 cents. So that is 82 cents per share. I will be doing one contract. So that is $82 of potential gains that I can make on this position. And if I'm trading this position, I want Nike to stay above 56 between now and next Friday, May 2nd. If I want to get assigned the position, I'm ideally looking for it to close just below 56. Now, Nike could go all the way down to $40 in the next 7 days. I am still on the hook of buying 100 shares at 56, but I've done my research, I've done my fundamentals, I'm happy at 56. So once you've selected your strike price, and again, make sure it is red, and at the bottom it will say sell one contract, whereas if I tapped the R section, I will be buying a put there, where in that example, I will make money if Nike goes down in value. But because I'm selling options and I'm looking to gain premium, I want to make sure I am selling the option. So just other stats here that you can see before we place this trade in Interactive Brokers. It shows you the performance profile. So you can see here that my max loss is $5.5 grand. That is if Nike goes to zero minus or plus the credit that I receive. Now the maximum premium I can make is, or the max I can make on the trade is the premium I receive. It's showing 77 here, as opposed to 82, because it's taken the bid price. Yep, it's taken the bid price. So it's taken the worst case scenario number at the current market value. And then this just shows you the risk graph. And the bit I also want to show you is the probability of profit. So it's sitting at 74%. And you can see that the delta on the position is 33%, delta of 33. And what that's saying is that there's a 33% chance that Nike will be in the money at the day of expiration. So as you can see, if you minus 100 from that 32, you get roughly around 70. So the probability of profit is a quick and dirty way to really find out what your probability of profit is if the platform doesn't show it. But most platforms these days will show you the probability of profit. So that's all good here. I'm comfortable with that. You know, the market's gone down very little bit, but if we click on order, it now brings up the order confirmation screen. So again, we are selling. At the top, it says the sell order, and just below that, it says Nike May 2nd, 2025, 56 put. So I'm selling one contract, a put at the 56 strike. And you can see here that the quantity is 1. We can increase the quantities of the number of contracts. I'm happy with 1. Now you've got limit order, got a market order, got various other things inside here. But I always like to do a limit order and look to do it at the mid price. I'm probably going to go just a bit lower just before I place this trade because I just want to get filled, etc. And then you can see if you want to do it, if this trade sits out there in the ether and is pending to get filled, do you want to keep it just for today, or do you want to keep it good till cancelled? So if it doesn't get filled today on Friday, you will wait on Monday and look to see if you can get filled. Generally, I just leave this today and I'll play around with the limit price just to make sure I get filled. Let me just check what the mid price is. Mid price is 77. Let's go down to 73. Wow, I lost for 74. And I've got filled at $74. So what that means is I have sold one contract, a night put, 56 strike, May 2nd, and got $74. Minus commissions, probably $1 or something. So probably net will be $73. And what we want is for Nike, if I'm trading this, I want Nike to stay above 56 before the day of expiration next Friday. If I'm looking to get a sign, I want my option to go in the money by the day of expiration, but not too much, because obviously I want to make sure I've not got a big unrealized loss when I get assigned the 100 shares. So I hope you've enjoyed this video. It's added some value. Comment down below if you've got any questions, and I shall see you guys in the next video.